Good day, everyone. Garrett Moore here, More Financial Management. Wanted to take a couple minutes today to talk to you about something that has been on everybody's mind, and that is the banking panic of 2023. Do my best to try to explain what's going on in the banking system and kind of what you can expect to see going forward. So let's jump right in. So we're going to talk specifically in this scenario about Silicon Valley Bank, which is the main one that's been in the headlines these days, and kind of what happened there, because there's a lot of overlap as far as some of the smaller regional banks as well. So the first problem is investment losses that they incurred. Okay, so we're going to look at here what's known as a balance sheet. So every business is going to have one of these. This is an accounting statement. Assets are going to be listed on one side. Liabilities are going to be listed on the other. So the first thing that happens when a customer shows up to a bank, they say, hey, I have some money. I want to open an account and I want you to keep it safe, ideally, right? So what happens in that scenario? That customer deposit actually gets listed on the liability side of the balance sheet because the bank owes the money back to the customer. Okay, so the question then is, what does the bank do with that money? Of course, they're a business, they're looking to make a profit, so they try to do something productive with it. So in Silicon Valley Bank's scenario, and a lot of banks, they chose to invest that money into bonds of the U.S. government, which is a very reasonable thing to do, given that the U.S. government has never defaulted on their debt. So that's exactly what they did. So they wind up with bond investments over on the asset side of their balance sheet. All right, and in hindsight, this is where the problem arises, okay? We talked about this last year. As you recall, the Federal Reserve increased interest rates at the fastest pace in history. They basically took interest rates from 0% all the way up to 5% in less than a year, which is a very dramatic and swift change, okay? When that happens, when interest rates rise, bond values decline. Okay, there's an inverse relationship there that's very important to remember. This chart basically puts dollars and cents to what happened as a result of that fact. So this is unrealized gains or losses on investment securities held by banks. This is from the FDIC itself. You can look over on the right side of this chart, and that is obviously recently, 2022 and beyond. Anything below that upper line is a loss. Okay, so unrealized means that they have experienced losses on these investments, but they have not necessarily sold the investment for a loss to lock it in. At that point, it becomes a realized loss. So this is unrealized, but it's a loss nonetheless, and it's a problem nonetheless. Problem number two, specifically when it came to Silicon Valley Bank, was that they experienced a classic bank run. Okay, so what is a bank run? A bank run is basically when somebody poses the question, is my bank unsafe? And if you are posing that question, you are probably going to take the conservative route. You're going to play it safe. You're going to act first, and you're going to ask questions later. And what are you going to do? You're going to take your money out of that bank, and you're going to put it in another bank or another place that you believe is safer. Okay, well, we just talked about this a second ago. We are basically reversing problem number one. Well, now that customer wants their money back. So the bank then has to go and sell some of those investments that they made at a loss so they can take that money and give it to the customer, which in effect makes the bank less safe. I'm putting less safe in quotation marks because of course there's FDIC insurance, but that's a conversation for another day. When the bank becomes less safe, More people ask the question, is my bank unsafe? The cycle perpetuates, and it kind of comes this self-fulfilling prophecy. That's a bank run. You combine problem number one with problem number two, and you collapse a massive bank in about a week's time. That's Silicon Valley Bank in a nutshell. Okay? So the $1 million question is this 2008 all over again? Don't get me wrong, this is not a rosy scenario, but I do not believe this is 2008 all over again. So let's look at why. We're going to go back to the balance sheet, assets on one side, liabilities on another. Again, 2008 arose from the asset side of the balance sheet, specifically what the banks chose to invest their money in. Okay, the difference is specifically what those investments were. In 2008, they invested in what are known as synthetic collateralized debt obligations. That definition is outside the scope of this video. All you need to know is that Warren Buffett himself described them as financial weapons of mass destruction. Hot garbage is another working definition. Okay, the difference today is that we're talking about government bonds. Okay, that is what these banks have invested in. Kind of the extenuating circumstances of these incredibly quickly rising interest rates have caused a problem. But again, going back, the U.S. government has never failed to pay a bondholder what they are owed on these investments. So again, not rosy, but certainly not catastrophic in my opinion either. Okay, this is another important fact to keep in mind as we are being conscientious of the health of our banking system. Okay, I'm going to draw your attention to the teal line. That is what's known as the reserve coverage ratio. This is essentially the cash cushion that the banks are keeping on hand for a rainy day. And you can see that they are keeping more on hand than they have in recent history by a rather substantial amount. So by and large, U.S. banks are quite healthy. And that's it. I hope that helped. That was a lot, drinking through a fire hose. So if you have follow-up questions, please don't hesitate to reach out. However you would prefer, I'm going to drop my calendar link in the video description below. You can directly book some time to talk about this if you would like. I hope that helps. I appreciate you all. Thank you very much and have a wonderful day. Bye-bye.